So trading Forex is a journey, as everyone knows, okay? And along the way, you will encounter plenty of ideas, strategies, philosophies, and the big holy grail. A lot of people selling you the holy grail, how to crack the code, as they say. But the truth is not that, okay? The truth is a lot of people out there, they make it harder than it needs to be when it comes to trading, right? Forex trading, it doesn't have to be a complex web of guesswork. In fact, to succeed in Forex, you need a systematic system that is simple, measurable, and repeatable, and something that you can apply repeatedly without getting lost in the noise. So if it works, you want to apply again and again and again, right? You don't want to apply only once. You want to apply a lot of times, and that's where the trick is. You have to find something that you can be applying again and again, and having a systematic approach is when you can find something to apply again and again. So one thing I've learned through years of trading is that our brains are constantly trying to trick us, okay? And this applies to Forex trading just as much as it does to the everyday life. So the brain is weird to recognize patterns, even when there's nothing in there, okay? It's called pareidolia, all right? And it's a phenomenon where we see shapes or patterns, like seeing a face in the cloud or a figure in the shadows that doesn't exist. It's literally just a noise, but our brains can make something out of it, okay? So like if you go into you go into the same thing will happen if you see the chart of a Forex currency or a stock or something. You will try to find patterns, okay? And it's really interesting. So suddenly those random lines and bars on the screen transforms into support lines, resistance zones. And this isn't just trading concept, it's psychological. Studies show that our brains are naturally inclined to seek out order and familiarity into chaos because it's energy efficient. After all, the brain's primary goal is to survival, not to truth. A fascinating study published into the Nature Communication explains how the human brain is designed to interpret and impose patterns on random stimuli. This is the same mechanism that leads traders to believe they've identified a significant level on a chart. And then I put it up so you can read the whole article. Another study from Frontiers in Psychology highlights how overconfidence in our ability to detect patterns can lead to poor decision making. And you can find this study here. But think about it. How often have you drawn a trend line on a chart, convinced that it's the holy grail, and only to watch that the market completely ignoring? You can find this study over there. Why is it not just about charts? Well, here's the thing. You're not just trading a currency. You are trading the entire economy behind that currency. When you see the US dollar soar after an inflation report, that's not magic. It's economics. And the market moves because of real world events, data releases, and investor sentiment. Take a moment to ask yourself, why does a currency move the way it does? Why does the US dollar spike after inflation numbers are released? When you start digging into the why, you are getting closer to what I like to call the real holy grail of trading, understanding the market's underlying drivers. I'm going to stop here and I'm going to let everyone see the full article tomorrow. But there's a lot. I'm not going to scroll down because I know you guys are going to take screenshots. But yeah, there's a lot into this, and this is where I explain how can you grade the currency off of +2, -2, +1, etc. Okay, but it's pretty simple. We use a lot of data, so CPI, central bank, PMI, manufacturing PMI, services PMI, GDP, etc. So there's a set of data that you can choose on your own, and if it's negative or positive, it's falling, if it's decreasing, if it's falling, but going up, you can put a scoring on that. So there's lots of ways you can do that, Dimitri. I'm just going to talk a few things I've been observing on the market in the past couple of days, and showing some trades we have potentially happening for today and tomorrow, and we go from there. All right. So before we starting, please have a look at the risk disclaimer. All right, cool. Hopefully everyone had some time to read it. So let's get into it. Let's go. I'm going to be using FinLogix today. Let me send the FinLogix website in the chat, so you guys can follow up with me. But I'm going to be going to chart. So let's just start with gold. Okay, I just want to start with gold so we can clear out this way. But it's really interesting because we just had a box here that got hit, and I've mentioned about this trade, and I've even entered that live with everyone, if I'm not wrong. I know for sure I've posted on my ideas on FinLogix. So let me just get it from here. Gold. There we go. So that was the idea. Long gold, the 17th of January. So we used to long at this price, 27.05, all the way to up here. Okay. So TP was 27.40. It's this one here. And the stop loss was 26.85 over here. And the entry price was at 27.05. Okay, over here. So there you go. We have a good trade. Sorry, we have a good trade here. Most likely what I'm expecting now from gold is to pull back a little bit. I'm not talking about like huge pullbacks like these. You know, I've seen some traders, often what they do is like, oh, okay, it must come down here. So I'm just going to drag a huge line over there. Dude, it's not about support and resistance. Remember what I say, it's understanding the underlying drivers of the market. It's the macroeconomic effect. Right? It's not about, let me trace a line and this will happen. Sorry, that's the truth. If you worry about it, that's the truth. No. So most likely, what will probably happen is we're going to have some sort of retracement here into this area and a continuation uptrend. I'm not too confident on this target, but I'm going to mention it. I'm looking at the 3,000, sorry, not here. The 3,000 target for gold until end of the year. Okay, so we have the whole 11 months to have it into that. So I'm not too sure if we really would get it on there by this. Okay. So but I'm long on gold. I think we're short at the moment, but long on gold. Most likely. Okay. Cleaning out gold. Let's go to US dollar CAD. I have a trade on US dollar CAD long as well, and I posted that here yesterday. Where it is. Long US dollar CAD. There we go. So I've longed US dollar CAD over here, and now it's up here. So we do have a little bit to go. Sorry. Do have a little bit to go, nearly halfway there, but we're getting there. Over here. And then this is, again, this is majority because of a stronger US dollar resuming into a weaker Canadian dollar. what I think can potentially happen is if Trump tariffs escalate, most likely we will have a stronger Canadian dollar and a weaker US dollar, and then US dollar CAD would be falling. Okay. And that's what I wrote on today's blog. I think it's live already. So let me just grab it here. Yes, it's here. Sorry, not here. There we go. This one. So I've wrote it down here. Great idea. So take a long US dollar CAD position, aiming for a move above 145, stop loss at 43. It's going to help limit the, sorry, there we go here. So at 45, targeting 45, stop loss would be somewhere below the level of 43. So majority would be best to be putting like 43, 40, 42, 900 with an entry somewhere around this area, and then a take profit over there. It's not like that good risk reward, but it's a good trade to short term, because I think if the tensions escalate even further, then we may have an even stronger US dollar. And actually, if you go to have a look into the US dollar index, get it here. We've seen, just put into candles and take this one off. Put into, wow, it's. So the DXY have dropped a little bit. You know, it dropped here on this area, and then it got back up and now it stays at the same level. Most likely what we can potentially see is a continuation uptrend, and this resumes me into one trade, short euro dollar. Okay. And DXY recupered some of the prior days losses we've seen, but it's suffering. You know, it's suffering the absence of the day one of tariffs under the new Trump administration. While the rebound was spurred by comments from Trump, that, you know, who flagged the potential 25% tariffs for both Canada and Mexico from start of February, which, as we know, resulted in a surge on US dollar CAD and US dollar Mexico pesos. As we know, euro dollar faded some of its recent gains, with the single currency back below the 104. You know, again, owning for the tariff rhetoric from Trump, who also say that they will strengthen out the deficit with the European Union through tariffs, or by the European Union buying US oil and gas. So that being said, I think to have on the portfolio a good euro dollar short would definitely make up for that. Maybe we do have a little bit more to go. We are on the top of the consolidation area, as we were here. But there is a sort of target area over there. Okay. So maybe when the market comes and enter this area, I would be looking to short down to 102. Sorry, 1. Yeah. Down to 1. Okay. Jesus. Yeah. There you go. Down to that time, it could be 3 months, it could be 6 months, it could be down here. Okay. So somewhere around this area. Most likely that's what we're gonna be See, from euro dollar. At least in the short term, I think the US dollar will be getting some profits, in my view, but the dollar is trading on the, I would say, the loft side. Managing some excessive exposure will likely remain very, I would say, good to do. Like having shorts having longs on gold and shorts on euro dollar would be protecting your portfolio as well. Okay. Now, moving on, we have some questions. Look, I don't know how to find your articles on FinLogix. All I see is the correct account. Maybe it could show navigation. Yeah, for sure. So just type in on your browser finlogix.com and you will come to this page. When you're on this page, if you maybe have a different screen, lower resolution screen 9, just scroll down and you will find the latest ideas. If you find the latest ideas, you can just click on here and it will open like a pop-up on your right side. And you can just click on my name. And there you have it. You have all the trades. I've posted today this sort of opinion, I would say. It's not like an actual trade, but it's just, I'm monitoring gold for potential long position. Currently, the price is on a strong uptrend. Looking to possible retracement towards a key support level. Retracement could present an excellent opportunity to enter long position alignment with the prevailing trend. And my target is set as 3,000, reflecting confidence in the continuation of the bullish momentum. So you can definitely always have a look in here. Okay. Cool. Awesome. Okay, that's good. Okay, coming back to here on euro dollar, I have some researches in front of me that I will read. Unfortunately, can't show, but I will read from a big bank. So euro dollar is still in search of a clear bottom. The US dollar has strengthened further into 2025, reaching historic extremes, and the euro dollar has gravitated toward parity. Better income US data, reflecting the move up in economic surprise indexes, have provided broader dollar support. Prospects for Europe's economy staying subdued, with the January PMI readings for Europe likely showing services marginally above 50 and manufacturing is still in contraction territory. Should underpin these. Now, this is from an institution and not in the whole PDF. They show technical supports and resistance. Where did I stop? Yeah. This backdrop is generally reflected in consensus GDP growth expectations, which have been on the rise since fourth quarter 24 for the US. While those Europe's economy continue to decline, despite the divergence so far, we think there is still scope for the trend to continue, at least in the first half of 2025. Beyond the latest macroeconomic developments, incoming US President Donald Trump adds another layer of complexity. US trade tariff considerations are front and center of every investor's mind. While there's a possibility of benign tariff trajectory, which would help stabilize the euro dollar, the probability of that is rather low in our view. The risks are skewed toward a more assertive tariff path, going heavy on China and somewhat lighter elsewhere. The risks here are that the Chinese yuan weakens beyond our expectation. We currently expect Chinese yuan to reach 750. So if we just go into USD Chinese yuan, this bank is looking to Chinese yuan at 750. Okay, So there's a big drop. So that's probably a good potential to long it. It's going to 4 hours.
Yeah.
Let me zoom out. Okay, see, that's not a huge drop, but they're expecting to go to 750. So somewhere over there, okay? Which would weight generally on pro-growth currencies like euro. In such an environment, the euro dollar may reach parity with occasional dips below it. So this bank's expecting euro dollar to go somewhere further, some small dips below the parity, so basically 1 in euro dollar, and is expecting a long move on USD Chinese yuan. Okay. Many factors could cloud to the outlook. It's fair to say that many positive factors have been priced into the US dollar, while a lot of negative factors have been priced in for the euro. For the market to change its assessment for both currencies, we would need US economic growth to slow more quickly. I 100% agree. Tariffs to begin. I agree. On Europe's growth to pick up. 100%. At this juncture, it's hard to see these dynamics planning out. But if 2024 taught us anything, it's that the path forward is unlikely to be linear. That's a good one. So 2025 forecast for this bank is we just a forecast lower to 102, 104, and 102 from 105, 106, 108, 110 respectively for each quarter and through fourth quarter 25. So I think there's a really good opportunity on those two currencies. What's that going on here? Oh, that's the 23. Yeah. Okay, cool. So yes, I think we're gonna probably continue to have a very strong of the US dollar. Okay. So the euro dollar is likely to slip to parity before a broader reversal takes place. In a base case, dips below parity should still be short-lived and can be used to reduce excessive USD long exposure. Boundaries. We look for technical support at around 1 and then 0.985 to downside. To the upside, we see resistance around 105. So they're looking at somewhere at 105 resistance. And that's exactly where I'm looking at to place my shorts. Okay. Where on here? Change this color. So maybe we can come somewhere on here. If we come somewhere on here, then it would be ideal to have a better risk reward. Okay. Not that we need like literally here to go like down here. We can have somewhere like this. That would be a great trade to have. Okay. Not this will happen like that because that's a swing trade. It's not like a, a day trade. But there's a big potential for this to happen. Okay, that's one of the tests that I most believe is euro dollar short, in my opinion. All right. Any questions so far? No. Yeah. Okay. All right. Continuing. The risks are, if the Fed hike rates due to very robust economic activity, the euro dollar would likely trade below parity, like 95 and 1. Alternatively, if US tariffs weigh strongly on Europe's economic growth and the ECB is forced to cut rates closer to zero, while economic activity in the US holds up, the euro dollar could also trade below parity. As for a quicker euro dollar trough, the focus remains on US. Fewer tariffs, headwinds, or less US government and investment spending still has potential to push US GDP growth below 2% in late 2025. If these were to happen more quickly, say in the first half of 2025, markets would likely price in more rate cuts and with it reverse the US dollar strength, pushing the euro dollar back into 105, 1.10 range. Okay. Again, I do believe that the side would be short. So that's from one bank. Now, they have another trade here. It's on GBP CHF. And GBP has lost a lot of ground. I don't usually trade GBP CHF, but I do trade GBP US dollar. I think we do have a good opportunity as well. Oh, wow, it's in 15 minutes. Yeah. Put this up. Wow. Okay, cool. So GBP has lost ground against most of the other currencies around the globe, and that's the trust fears that made big headlines. Overblowing, and the reaction was merely a necessary equilibrium repricing rather than beginning of a major 2022 like shock. As for GBP CHF, we see the CHF being viewed as a hedge at a time of major policy uncertainty out of Washington. However, we also see the pound carry advantage over medium to long-term horizon. At this point, neither of the two strongly outweighs the other. In our opinion, they should keep GDP CHF, despite increased volatility, trading sideways within its well-established range. Now, listen how cool what these institutions say. As for GBP CHF, we see the CHF being viewed as a hedge at a time of major policy uncertainty of da-da-da. However, we also see the GBP carry trade advantage over medium to long-term horizons. At this point, that's the nice part. At this point, neither of the two strongly outweighs the other. And that's exactly what I always say to everyone. If you want to trade Forex, okay, you can trade Forex. But you need to find the strongest against the weakest. You can't put trend lines and then trade that. All right? Say, yeah, cool. Now, that's here. It goes down. Well, the pound is weak at this moment. The dollar is strong at this moment. So, shall we long US dollar and short the pound? What other currencies are weak? Euro is weak as well. How can we find that one currency is weak and one currency is stronger? Well, you will find it tomorrow. That's the way I find it's through the grading system, as Dimitri has asked. So you compile a lot of data points, put it all together, and then you come up with a grading. If the CPI is raising, that's a positive grading for the currency, for the country. It's not good for in general for the people, but it's good for the country because that pretty much shows that the bank will have to hold, the central bank will have to hold the interest rates higher for longer to be able to to be able to fight the high inflation. As of on the other side, if inflation is decreasing, then the central bank can continue to slowly reduce the target, the rates. Okay, but that's the simplest way you can trade Forex. That's literally the simplest way. You have all the high frequency trading that it's not arbitrage. It's literally high frequency trade. There's a lot of things to ways to trade. Okay, but that's definitely one of those, and I've been using it. It's been working. Cool. So my trades would be euro dollar short, USD Chinese one long, pound dollar short, Gold short a little bit, but then afterwards low. Maybe next month we may have a dip and then a continuation upward. And most likely we will see a 25% tariff into China, Mexico, and Canada, and this will weaken those currencies. Of course, I can't forget US dollar CAD as well. It's one of my trades, long trades, and that is about it, ladies and gentlemen. Do you guys have any questions? I think today was pretty quick. I was more like, free-handed than topics. No questions? Okay, that's good. All right, guys, then thank you so much. Hopefully everyone can have a good weekend. I won't be here on Monday because it's public holiday in Australia. So I'll be out. For those who are in Australia, enjoy the Anzac Day, sorry, Australia Day. And I talk to everyone next Tuesday. Okay. CAD CHF. Yeah, again. CAD CHF. So again, it's a neutral currency for me. CAD is neutral. It's negative, sorry, but CHF is neutral. So there's not much to do in there. So if we look here, you guys have to remember that it's not because you want to trade that you will have to open a trade. See, like look at this chart. It's literally going sideways. There's nothing to trade here. You can trade it down and you get caught on the up. You pay a lot of swaps and blah blah. So it's not worth it in my opinion. All right. I'd rather trade those currencies that have something happening and have something that is potentially to explode that currency somewhere, to not trade things that are neutral. All right. All right, guys. Thank you so much. See you all Tuesday next week. I'm back into the same place, same time at the office. See you guys. Have a good weekend. Bye bye.